August definitely reminded me of the psychology behind investing and how that sometimes can be more of a deciding factor than the actual numbers. For example, even though Nvidia announced beating expectations and a positive earnings report, their share price dropped by 6% the next day. And then we have the news of interest rates potentially dropping in September, even though we don't know by how many basis points, but that news alone caused a surge in the stock market towards the end of August. Now, of course, that makes more sense. It's just pretty interesting to notice. Regardless, my portfolio went through a lot of ups and downs. And in this video, I'm gonna share with you guys how it did for the month of August, including how much I made or potentially lost, the buys and sells I made, how I did in dividends, and what my outlook is as we get settled into the month of September. But before we get started, make sure you leave comments below on how your portfolio performed. Hopefully you were in the green more often than not. So the month of August treated me pretty well. For the month, my portfolio increased by 3.23%. Then when it comes to year to date, I'm looking at almost 26%. And all time, I'm at 43.66%, which is almost 50%. That'll be pretty cool when I actually make it there. I'm not necessarily trying to have a portfolio that's extremely volatile, but it definitely has its moments. And despite that volatility, it's pretty cool to see how my portfolio competes with when it comes to funds like the S&P 500 that pretty much give you a general idea of the entire market. By the end of August, my portfolio was up about 0.11% more than the S&P 500, and year to date, I'm up 7.5%. I see why people like to compare their portfolios to things like the S&P 500 because how they do in comparison is really a testament to the buys and sells that they make and how those buys and sells affect their portfolios in the long term. August was a pretty quiet month when it comes to sales. I actually wanted to spend more of my time and my money buying more into dividend positions that I currently had. And I also actually added a brand new position that I was keeping my eye on for a little while. For starters, I bought $30 worth of Target shares, and I really feel like the long-term hold I have with Target really shows how investing in what you know can definitely pay off. Earlier in the month of August, they announced an increase in total revenue, total shares, and other revenue, and with that news, their shares went up by 11% at one point. I always felt like Target provided their customers with a really great shopping experience, at least from my opinion, but when they finally decreased their prices to compete with inflation, I felt like that was gonna make the biggest impact, and that's what they've shown so far, and hopefully that can benefit them in the future. Also bought a little bit into Avicii Properties. I actually started investing into them towards the end of July with some funds that I had after selling my shares of AT&T. And that was actually a position I had been holding since I started investing back in 2019, but I really felt like Avicii Properties was going to be a better long-term hold with their dividend payout history and their overall share price history, despite the fact that I was sacrificing a position that had a much higher dividend yield. And then I added a new position, Williams-Sonoma, which I had been looking into for a while, but I wanted to find the best time to actually invest into it while I was building up my portfolio with other stocks, but I finally invested into it. And Williams-Sonoma is a home retail company with stores like Williams-Sonoma, Pottery Barn, and West Elm. I actually have seen those other stores, never been into it, but that was really cool getting some of that familiarity. But the biggest reason I invested into Williams-Sonoma is their long-term dividend payout history, which they have a 5-year CAGR of 17%, which means for the past 5 years, their dividend yield payout has increased roughly by 17% every year. So that's definitely something I want to see. As a matter of fact, every position I invested into for the month of August has a dividend compound annual growth rate that exceeds inflation, and 3 of those 4 positions actually exceed 10%. That's definitely going to be important for me in the long term, especially as someone that has the goal of living off passive income in some way, shape, or form. Speaking of dividends, by the end of August, I was paid a total of $31.96 from 16 different stocks and ETFs. That brings my annual income so far at $213.09, or about $26.64 per month. And of course, I like looking at trackyourdividends.com to see what my future potential is. And as of right now, or at least as of the end of August, within 1 year, I can make $360 per year in passive income. In 5 years, I'm looking at almost $700 a year. And in 10 years, I'm looking at over $1,300 per year in dividends. I actually go more into detail about the dividends that I made in the video I'll link in the comments below, including the companies that paid me and how this compares into my previous history. If you're really somebody that doesn't invest a lot of money on a weekly basis like I do, which is only $30 a week, hope you guys take some time to watch that video, because I'm hoping it can be a bit of a motivational tactic on how, despite how much you're investing, it can actually make you some money over the long term. Watching other finance YouTubers can honestly be a bit of a humbling experience because I'm constantly reminded of how much I don't know, but again, we all start somewhere, so it's all good. But I think my primary goal for the month of September is to actually get some more knowledge on different metrics that are really important when it comes to selecting dividend paying stocks and ETFs. Knowing more metrics will also help me review my own portfolio, which is a constant goal I've set for this year to make sure that the positions I have are there for my ultimate goal, or if I need to actually sell them and maybe invest into something that'll be a little bit better. But at this point, with the changes I've made, I think I'm doing pretty well so far, even to the point where I'm actually, if I wanted to, I could pay a little bit of my monthly bills with the passive income that I'm getting. And I'll talk more about that in this video, which I hope you guys take some time to check out, but I'll appreciate you guys watching this video. And until next time, as always, take care.